Japan, which is the United States' closest ally in Asia, just did something that would make the Trump administration furious. Shigeru Ishiba's government is making it clear that they are done following US demands, and they need to save their own economy first. This is why Japan has recently started buying oil from Russia, despite restrictions imposed by the United States. But this is not the only sign proving that the Japanese government is ignoring Washington. Just last month, Japan raised the alarm about its debt problem. Interestingly, the US has not offered any help despite Japan being the largest creditor to the United States and holding over 1.1 trillion US Treasury bonds. With economic pressures from Trump's tariffs, Japan is not only considering selling its US bonds, but also showing that it will no longer follow US foreign policies that do not favor it. Meanwhile, the world is starting to move away from the US dollar assets to Chinese bonds, and it's coming straight from the BRICS nations along with over 20 other countries that align with the organization. And here's where it gets very real. Brazil is already thinking about using Chinese money, not US dollars, to borrow and lend. This is happening at a time when the US economy is drowning in $36.9 trillion of debt, and the long-term bonds are becoming unpopular. BRICS plus nations moving to the Chinese bonds market could be the beginning of a slow collapse of a system that gave America its power. And the scary part is that most people have no idea it's happening. Before we get into more details and analysis, ensure you are subscribed to the channel. For over half a century, Japan played the role of Washington's most loyal partner in Asia. It backed US policies, stayed in step with America's global agenda, and avoided bold moves that might disrupt the alliance. But that era of quiet obedience is breaking down. Tokyo has made a move that Washington didn't just oppose, it tried to prevent. Japan has resumed oil imports from Russia, directly challenging the sanctions regime the US imposed after the Ukraine war. This isn't some backdoor deal or accidental oversight. It's a deliberate, government-approved decision to put national interests above foreign pressure. This is the first oil trade between Russia and Japan since early 2023, and it is not a secret deal. It's a government-approved move. The Japanese government asked Taiyo Oil, a private refiner, to buy 600,000 barrels of Sakhalin Blend crude oil from Russia. The oil comes from the Sakhalin II project, which also supplies Japan with vital liquefied natural gas, LNG. And that's the real pressure point. The LNG plant produces oil as a byproduct. If Japan refuses the oil, it risks disrupting the gas supply chain. So the government didn't just allow the purchase, it pushed for it, even though the rest of the West has been avoiding Russian oil since the Ukraine war started. But the situation gets more delicate. This oil import falls under a temporary US waiver, a special exception allowing Japan to keep buying Sakhalin II crude without breaking sanctions. That waiver, however, is set to expire on June 28, 2025. After that, unless Washington offers another extension, Japan could be forced into a corner, either break with the US or risk energy shortages. For now, Japan is buying time, but it's also making something else clear. When it comes to economic survival, it won't wait for US permission. And there's another twist. The oil was delivered by a ship called Voyager, which is blacklisted by both the US and the European Union. Usually, dealing with blacklisted ships is risky. But because the waiver is still in effect, Japan won't face punishment this time. The EU doesn't apply secondary sanctions on countries outside Europe, so the deal was allowed. But it still looks bad. One of America's closest allies is now using banned ships to bring in Russian oil. This shows just how serious Japan's energy situation has become. The country depends heavily on energy imports. Since the Fukushima disaster, nuclear power has been unpopular. LNG has taken its place. But that also means Japan needs to keep gas and byproduct oil flowing. And when LNG supplies are threatened, Japan is clearly ready to bend the rules. But there's a ripple effect. If Japan can secure exemptions and import Russian oil without consequences, what's stopping others from demanding the same? Every loophole weakens the West's sanctions regime and hands Moscow a financial lifeline at a time when the US and its allies are trying to isolate it. This isn't just an energy deal, it's a warning shot, Japan's return to Russian oil reveals how quickly global unity can fracture when energy needs collide with geopolitical goals. And it might only be the beginning. Japan's actions are not only about oil. The country is also facing a deep debt crisis. Just last month, Japan raised alarms over its national debt, which is now the highest among developed countries at over 260% of its GDP. The Japanese yen is falling, inflation is rising, and the economy is under pressure. This is why Japan's Prime Minister has raised the alarm, stating that the country's finances is in a worse state than that of Greece. What did the United States do to help? Nothing. No support, no public offer of assistance, not even a kind statement from Washington. This silence is shocking because Japan has been one of the U.S.'s biggest financial supporters. Japan holds more than $1.1 trillion in U.S. Treasury bonds, making it the largest foreign lender to the U.S. government. Japan has helped fund American wars, economic bailouts, and major spending programs for years. And yet, when Japan is in trouble, the U.S. says nothing. This is pushing Japan to think differently. Why should it keep supporting U.S. debt when the U.S. won't support Japan in return? Financial experts in Tokyo are now warning that Japan might start selling U.S. bonds to help its own economy. If that happens, it could cause serious problems. Interest rates could jump. The U.S. dollar could weaken, and other countries might panic and sell their U.S. debt too. To make things worse, President Donald Trump's tariff policies are hurting Japan. Trump's America First idea is back, and with it comes a new round of taxes on imported goods, including Japanese products like cars, steel, and electronics. During Trump's first term, these tariffs cost Japanese companies billions. Now, Japan is bracing for even more economic pain. But instead of begging for help, Japan is changing its attitude. It is starting to review all of its policies and may dump U.S. policies that affect its economy negatively. Japan is not suddenly becoming anti-American. It still values its partnership with the U.S., but it no longer sees that partnership as unbreakable or automatic. Japan is now repositioning itself, adjusting its foreign and economic policies to fit a world where U.S. leadership is no longer stable or predictable. There are signs that Japan is getting ready to build closer trade ties with China, even though the two countries have many disputes. Japan is also improving its ties with other Asian countries. Meanwhile, the BRICS countries are quietly making a big move. They are turning their backs on U.S. government bonds and choosing to buy bonds in Chinese yuan instead. This is a huge shift. For years, countries around the world bought U.S. dollar bonds because they were seen as safe. But now, BRICS countries are saying no more. They don't want to depend on the dollar anymore. And they are showing it with action. Brazil has already started. It is now selling bonds in Chinese yuan instead of U.S. dollars. This is about freedom. Brazil and other countries are worried that the U.S. uses the dollar as a weapon. After the U.S. froze Russia's money and kicked it out of global financial systems, many countries realized their own money could be taken too. Instead of asking Western countries for loans, Brazil is turning to China, and China is offering better terms, fewer restrictions, and support through its large financial networks. This is helping Brazil avoid the risks that come with the U.S. dollar. And it's not just Brazil. Other countries in the global south, like India, South Africa, Turkey, and Argentina, are watching closely. Some are already preparing to follow Brazil's lead. They see Chinese yuan bonds as a safer, more reliable option than U.S. dollar bonds. China is ready for this. Its central bank has built systems to handle cross-border payments in yuan. It has signed currency swap deals with many countries, and it has made it easier for foreign investors to buy and sell Chinese bonds. For decades, the U.S. could control the world economy because other countries needed the dollar. But now, countries are tired of having their economic future decided in Washington. When the U.S. raises interest rates, it hurts other economies. When it puts sanctions on countries, it can block them from using dollars. That's why BRICS members are turning to the Chinese yuan to protect themselves. Chinese banks are not only selling bonds, but also helping BRICS members issue bonds and run full financial operations using the yuan. A few days ago, Brazil announced it would issue what it called Panda Bonds. These are bonds written not in dollars, but in Chinese yuan. That may sound like just another financial tool, but it could change global finance. Normally, countries like Brazil borrow money in US dollars. That's because the dollar is widely trusted, and borrowing in dollars usually means lower interest costs. But now Brazil has a strong trade surplus of $74 billion, meaning it exports more than it imports. And with US interest rates at 6.7%, borrowing in dollars is expensive. On the other hand, borrowing in yuan costs only 2%. Even if there's some risk in using the Chinese currency, it's starting to look like the better choice. Brazil also trades a lot with China. If it's already earning yuan through trade, why bother converting that money into dollars at all? This is not just about interest rates. It's about shifting away from the dollar system. Brazil is a big country, and its financial decisions matter. If it can borrow in yuan, other countries might follow. Is this the beginning of the world moving slowly away from the dollar? It sure looks that way. Unfortunately, President Trump's tariffs are not making things any better. Trump's trade war made it harder for foreign countries to earn dollars by selling goods to the US. That also means they have fewer dollars to invest back into the US economy. Meanwhile, if countries like Brazil and the BRICS nations are now choosing yuan bonds instead of US Treasury bonds, fewer people are buying America's debt. This is a serious problem. If the US government doesn't have enough people willing to buy its bonds, interest rates must go up to attract investors. Higher rates make it more expensive for the government to borrow money, and the US already has over $36.9 trillion in debt. Even a small increase in borrowing costs could add hundreds of billions to America's annual expenses. The dollar didn't fall overnight, but slowly, step by step, it's losing the special role it once had. And the biggest risk is that if America can't attract enough foreign money, it might not be able to afford its own debt anymore. Back in Japan, sales of government bonds are not going so well. Long-term Japanese government bond yields are rising fast. The yield on Japan's 40-year bond recently hit a record high of 3.7%. Even though it has come down slightly to 3.02%, that's still 70 basis points higher than where it started this year. The 30-year and 20-year bond yields are also climbing, up by 60 and 50 basis points. These may sound like small numbers, but in the bond world, they are huge and dangerous. Because of this, many Japanese investors are now moving their money back home. In 2024 alone, they bought a record 28 trillion yen, which is about $180 billion in Japanese bonds. At the same time, they cut their purchases of US and other foreign bonds in half. This is called capital flight, money rushing out of the US and back into Japan. It's happening because Japanese government bonds are now giving better returns than before. Big firms like T&D Asset Management and Dai-ichi Life have warned that once 30-year yields hit 2 to 2.5%, money would start flowing back into Japan. That's already happening. All these economic moves show one thing clearly. Trust in the US financial system is eroding. From Tokyo to Sao Paulo, from BRICS to the broader global South. But will Trump work to fix this trust issue, or will he double down on his trade policies? If you're paying attention to these shifts before the headlines catch up, you're already ahead of the curve. So don't just follow the story. Stay ahead of it. Hit the bell and join us as we track the unraveling of the old order and the rise of a new global reality.